challenge the central bank had identified was a consumer protection one. I'm sure everyone has heard of somebody being harassed by a rogue lender. So that was the primary problem that was being solved for. And we came together and united to basically push for progressive policy. The second thing we wanted to do was to differentiate ourselves from the rogue lender, because most of us are mission-driven fintechs. Our objective is actually financial inclusion and promoting access to finance. And some of these rogue lenders were going against what we stood for, and we wanted to differentiate ourselves from that. And then finally, we wanted to show research from our side. And so I'll just speak about those three different things really quickly so that we give you a sense of what the association has done. And then I will also speak about the current projects and then close it out there. So in terms of policy, I think our biggest win was the CBK Amendment Act 2022, where the digital credit provider regulations were born out of. This was a 2-year process where we engaged various actors such as Central Bank, National Treasury, Office of the President, Office of the Data Commissioner, to come up with a framework that made sense not only for the consumer and government, but also for the lenders. The idea, the underlying idea was that let us regulate, but let us not kill the fruits of innovation. The truth is that innovation always has a price, and sometimes that price comes at the customer's expense. And what we were pushing for was the balance between those two interests. If you look at the DCPR 2022, some of the big things that are not included that would have killed our industry are things like minimum capital requirements. We use our own capital to lend, so we didn't understand why you'd want to hold our capital and it's laying there doing nothing. And then some of the big wins for the consumer was no debt shaming. So I think that's a major win, and as you have seen now since 2020, mid-2022, if you've heard of any debt shaming, please let us know. And there's a process now through which we report and actually have these lenders punished. The Office of the Data Commissioner has already fined one rogue lender for that type of behavior, and those are some of the big wins from the consumer side. In terms of changing the narrative, I think it is now obvious. A lot of the digital lenders and digital credit providers in our membership are pioneering various approaches to lending to the consumer, particularly that one at the bottom of the pyramid. One of the most innovative approaches was Tala has a product where you can choose the date of repayment. So you're not limited to a single day or a 7-day or 14-day. You can choose whatever payment date works for you based on your trade cycle. You have others like Empower who have figured out how to embed themselves in your salary and provide insurance products as you're taking out loans that can protect you for incidentals such as personal accident cover. And of course, there are many others. We have many members, including Faraja and I said as AutoCheck. And then we have research. I think the biggest research project we undertook was actually for the policy conversation we were having with the various stakeholders. We put out a report of 11 comparative digital lending regulations from across the world. We then identified the best practices those 11 markets were using and recommended them to the central bank. One of those recommendations was actually picked up, which was a dispute resolution mechanism that has now been embedded in the GDPR and in the DCP regulations, but is still being worked on. Now, currently, we've passed the law, so the question is, what are you guys doing now? The industry still has a lot of way to go. I always say we have barely scratched the surface. Just for context, our 27 members lend about 10 billion shillings every month to 8 million customers. The demand for credit today is closer to 200 billion shillings every year. So as you can see, we are nowhere near where we need to be. So we need to grow. So what we're focusing on at the moment is we have 3 projects. The first is we've got a best case data privacy policy. This we're working in conjunction with partners like FSD Kenya, Office of the Data Commissioner, and we're going to have a launch event where we'll invite all of you to have a look, to read, and to see some of the innovative ideas that we've come up with. One of the key things that has interested me is how do you deal with data privacy for people who have people with disabilities, right? It's a question the Office of the Data Commissioner asked us to start thinking about, because it wasn't something that, as you can imagine, business would be thinking about in a very sort of natural, business as usual state of mind. So those are some of the innovations in that policy that will come out, and we hope that we again set a standard. The second project is we're actually looking for funding. We want to come up with a small ticket dispute and debt counseling mechanism. This is in the event of over-indebtedness. One of the big risks to the consumer is that because there's so many digital credit providers, all of these digital credit providers are looking for the same good customer. And sometimes a good customer may get 10,000 shillings from 10 different lenders when their limit is actually only 10,000 shillings. So what happens in the event of default? What happens to that type of customer when they've lost their ability to access credit, when they're in such deep debt? So the idea here is that we'll have a mechanism where the customer can click on a link, basically aggregate all the loans on this that they have on this platform, and then there's a negotiation between the lenders and this entity that we're creating that will then reduce the exposure for the customer and give them a payment plan that is suitable, and all the money will then be repaid to the lenders, and we think that will have significant benefits to the consumer. And I think the final thing we're working on is we are partners in a industry-wide MSME access to finance report, being led by CIS Kenya. CIS Kenya is a credit information sharing framework where they brought in partners to do a study to understand what more can be done around access to MSME finance. The shocking thing is that the MSME is still saying we can't access enough capital to do our business. So the question we're trying to solve for is what more needs to be done. That's who DIFSAC is. In conclusion, I just wanted to say thank you to the Nairobi County for hosting this Tech Week. I think this is an innovative idea where it brings all major stakeholders across the technology space. Usually digital financial services are left out from these types of fora. I don't know why, yet the most innovative sector is actually us, the fintech ecosystem, and in particular, the credit ecosystem. So we just want to thank the COO, Victor Agola, for putting up this impressive event. And then finally invite you all to our stands. I've seen many of our members have stands at this event. So please have a chat, talk to us, tell us what you need, and let's keep working together. Thank you very much.
Good afternoon, ladies and gentlemen. My name is Henry Mbugwa from AutoCheck Financial Services. So I'll give you a brief about AutoCheck Financial Services. Who are we? So AutoCheck Financial Services, we're trying to redefine how clients or how people acquire vehicles. We operate in 9 African countries. And our desire is born from the query, can we have someone identify a vehicle and drive away with it the same day? That actually has been our biggest desire. And so how we've gone about it is to try and automate the whole process from end to end, understanding the customer journey from the time the client identifies a vehicle, either through online or through visiting a dealership. So basically what we do is that we try and amalgamate all the many dealers that are currently there in the country. So we have so many dealers, but they're all fragmented. And you can imagine if you're looking for a vehicle, you will need to move to several showrooms before you decide on the vehicle that you want to buy. So basically we've created a marketplace where we can enable all these dealers be able to list their vehicles. And then we understand it's not only about listing the vehicle, there's also the bit of acquisition. So we come in and we try and offer a solution to the end clients. And how we do it is that we've tried to do it the non-traditional way, where as a client, you basically requested to come with your bank statements, then you have to wait for a lead period for you to get your vehicle. So what we've done is that I think we're currently the only finance company that is able to give asset-backed facilities in seconds. So how we've gone about it is that, again, in partnership with the dealers, when you enter a dealership, the only thing that you need to do is the dealer just need to take your details, input them on the system instantaneously. Basically, you get an approval letter, and a conditional approval letter that allows you to actually have a discussion. You're actually in a financial institution that allows the client to look at the conditions and actually invite them to have a discussion. If you're comfortable, and then you upload the documents, and instantaneously you actually get your approval. So more or less, we've actually managed to address the customer's need and have the customer actually have an approval done the same day. We've actually managed to have the clients drive with the vehicles the same day. We're actually we're asking ourselves, can we reduce that period to 2 hours as you're enjoying your cup of coffee? Someone else on the back end is working on your vehicle. And the answer is yes. So basically, that is what is driving us. We operate, as I've said, we operate in 9 African countries. What that has enabled us to do is to borrow some best practices. And allow me to use Nigeria as a case in point. We have Yago Rides, that is an equivalent of Uber. So we have like 300 players operating under that umbrella. We've provided financing to those drivers. But beyond providing financing, we actually part of the businesses of those guys that we've given the facilities. How do we do it? We have amalgamated our systems with actually Yango, so we can actually be able to see how a taxi person or a taxi driver is faring in a day. So, for example, let's say call it Zone A. So we find that drivers in Zone A are earning better, but you're in Zone C. So by the end of the day, we're actually able to estimate, if you actually stick on Zone C, this is the much you're actually going to earn. And because we are partners, we actually call and tell you, hey, Mr. X, we've seen that you're actually on this particular zone, but your colleagues are on Zone X, and it seems to be better. So why don't you move to Zone X? So basically, those are some of the solutions that we are actually giving in AutoCheck. So as I conclude, I would want to invite you to pay us a visit. We are at Westpark Towers on second and on second and fourth floor. And also in conclusion, I want to thank the Nairobi County Council, Homeboys, for arranging this. So thank you very much.
Good afternoon, ladies and gentlemen. Oh, wow. That is really quiet. Good afternoon, ladies and gentlemen. Perfect. So my name is Vikran Ubi. I'm the country lead for Paystack, Kenya. So basically what I want to do through this presentation is walk you through who Paystack is, the work that we do across Africa, and the work we want to do in Kenya. So my background basically is in fintech. I've been in fintech for about 8 years now across different verticals from telecommunications, but mostly in the fintech space. So yeah, I have a bit of a presentation that I want to walk you through. So yeah, looking forward to taking you through who Paystack is. So basically, who Paystack is, we are a Pan-African payments company focused across Africa, and our main service, or what we try to do, is help businesses in Africa, one, get paid. So that means is how do you get paid from your customers? The second thing is how, as a business, do you make payments out? So that is our core objective, and our objective is to increase the GDP of the internet in Africa. So just a backstory of who Paystack is. We were founded in Nigeria in 2015 by two brilliant individuals, Shola and Ezra. And the goal they were trying to solve was like similar to what we're trying to do now, is how do we help SMEs and startups get online? Because what are the solutions that were existed in the market were specifically tailored for large enterprises, people who had who were technical savvy, but people who weren't being served were the startup businesses. So yeah, that was a problem they tried to solve. And our growth has been rapid over the last few years. So we've been expanding across different markets in Africa. So we went into Ghana, South Africa, and now we're proud to say we're in Kenya. And we're now looking to extend this business across Africa. So we're looking to have Egypt later this year, Ivory Coast, Rwanda, and a bunch of other East African countries in the next few months. And then what we've been doing as Paystack, as we've been scaling, right? One of the interesting things is that Paystack was one of the first companies, YC, to get into YC. And what that means is it's a program run by Silicon Valley, and basically it helps small businesses and startups across the globe get started. They help with funding, they help you create your business model. And we were actually one of the first companies in Africa to get into the YC program. And what that did is it accelerated or was a catalyst for other businesses in Africa after us. So after Paystack, we see about 75 businesses now, or startups, getting onto the YC program, which is a huge success story for Africa. And the other interesting thing is we've been raising capital from Visa, Tencent, Stripe, and as of October 2020, we were fully acquired by Stripe, based out of the US. So we operate as a subsidiary of Stripe, and basically what that means is we are the Stripe for Africa, in a nutshell. And basically what we do is we help, again, like I've said, like businesses collect and disperse money. Yeah, just a bit about where we are in Kenya. So this journey started off in 2021. We came to the market, tried to understand what are some of the challenges small businesses had, startups have, and just trying to learn like what are the underserved needs that we as Paystack can fulfill in the market. We started off with a small beta. We worked with merchants. We got like really good feedback that's helped us refine the product over the last few years. And as of November 2022, we were excited to then get fully licensed by the Central Bank of Kenya. So Paystack is a registered PSP with the Central Bank of Kenya currently. And out of that, it helps us now to expand our business in Kenya and fully deepen our footprint or roots in Kenya. And interesting enough, from when we opened the pilot, we now have 400 businesses that have already signed up. And we have a growing team that's about 10 people in Kenya. So that's just a bit about who Paystack is. But I want to talk through like what are some of the things Paystack is doing to help these startups and SMEs, right? Sorry. This thing's misbehaving, sorry. Perfect. So I just want to set a bit of context to why SMEs are important for us and why we need to focus on this, right? So according to like a recent study, was like 90% of businesses in Africa are SMEs. and 60%, and they provide 60 to 80% of the jobs in Africa, and 40% of the GDP comes from SMEs. So that means there's a huge potential for SMEs in Africa, and we need to work as partners, collaborate, and try to build solutions that help these SMEs, right? And then when we come back to Kenya, about 70 to 80% of the jobs by 2024 will be contributed by, they will help contribute the GDP by 2024. Yeah, so that's basically, so that just sets context to like why SMEs are important. So what are some of the tools that we offer, right? So the basis of our platform is a payments layer, right? So that's the first thing we help businesses do. So there are 3 buckets of how a merchant or a business can use the Paystack service. The first one is the code integration. So the code integration is basically our API. So Paystack being an API-first company, how do we help merchants who have advanced systems or have development capabilities? How do they plug into our APIs very quickly? The second bucket is low code. So these are tools that we help businesses with to be able to plug in payments very quickly. So they already have systems in place, but how do we plug in payments very quickly? So it's literally like 5 minutes to plug in a Paystack payments gateway. And I'll talk about it a bit more. And then the third bucket, which is really exciting for us as Paystack, is the no-code tools. And I'll talk through about each one in a brief. So the code integrations is basically how does a customer or merchant, like I said, integrate to Paystack very quickly. So so we provide things like the Paystack checkout, where basically when you're a merchant, an e-commerce merchant, you can redirect to our checkout to complete payments via different payment methods. So like card payments, Apple Pay, mobile money payments, bank transfers. So we offer a bunch of like payment tools for businesses to be able to quickly collect payments from their customers. So that is the most popular option. And then we have things like SDKs if you need to plug into your Android or iOS apps. We also have things like the Checkout.js, which is a few lines of code and you're up and running. And then we have things like Charge API, which is more advanced for merchants who have like systems in place or are like PCI DSS compliant and want to build or they want to build their own checkout experience. So we're able to support that as well. Feel free to go to our website and read about our documentation. It's open source. You can start integrating and start testing. And these are some of the businesses that are already using Paystack across Africa. I won't spend too much time on that. And then this is where the interesting part is, right? So Paystack has done a bunch of integrations with a lot of providers across the globe, right? So we are like the primary partner for Shopify, WooCommerce, Wix, Zoho, Zapier. So we build these integrations so that if you're a merchant and you use these tools, one of the challenges then you have in Africa, and this is a big problem we've seen across all the markets, is how do I then plug in payments? Because these are international payment tools. So we provide the integrations to some of these platforms. So these are some of them, but we have a library of 40 plus plugins which you can use today. And then the other one is the one which is the most interesting for us. So when Paystack launched, one of the challenges we saw was like we were still struggling with people who needed to get started. So think of your Instagram merchants, your WhatsApp, Facebook merchants. How do we help them start selling? How do we help them test their ideas? So we built something called Paystack Commerce. And Commerce is just like a bunch of tools that we help businesses to get started. So the first thing, like payment pages, where you can create like a small page where you can easily collect payments from your customers. For example, if you're a plumber and you need to bill your customer, you can easily just send them a link and you'll be able to collect payments quickly. Product links is tied to payment pages where, for example, if you're a shoe seller or you're trying to sell something very quickly, you can create a product link, upload it onto Instagram, WhatsApp, share it across channels, and you'll be able to collect payments for that. And the other interesting one is Storefront, which we've seen like a really good traction around it. It's basically an e-commerce store that you can set up in 5 minutes on Paystack. And basically what you do is upload your products, do order management. And then the other thing we've just launched is digital products. So you can actually sell digital products on Paystack. So if you're a musician, you're an artist, you're a author, you can actually now upload your products and sell them on storefront. The other interesting thing is invoices. So you can be able to, we provide like a full invoicing system. So you just sign up and provide invoicing. The other interesting thing that we're now seeing with a lot of businesses in Kenya is subscription billing. So one of the things we try to do is help businesses manage their subscriptions without having like expensive tooling for that. And then split payments is another interesting tool where you'll be able to collect payments very quickly and then split it. If you have like commissions, you'll be able to do that. So that's pretty much the 3 different solutions that we offer as the payments provider. I'll just play this quick video just to give you like a full sense of what we do. And then the last thing that I want to talk about is a new service. Okay. I'll just spend like a minute on this. So basically, we launched something called Paystack Catalyst, and this is an interesting program that we've seen like really take up because we understand one of the biggest problems is not payments. Startups have other problems that they need to solve. Payments is just one of them. So how do we work with some of these startups to be able to give them tools that will help them accelerate their growth? So things like reduced tooling costs. So for example, on AWS, how do we help you get lower costs on AWS or others different toolings? How do we put you in front of the right partners? Because we have a vast network of VCs and angel investors. So how do we work with you to put you in front of the right partners? And then how do we help you as a business, like on technical support? So you're trying to build a very complex solution. Paystack then helps you work with your developers and figure out how do we build these tools. And then, for example, like if you see the picture, we also send some of these cohorts to our office in Stripe where they can work for a week and work with like our founder, John and Patrick, to learn more about how they could scale their startup. So that's pretty much like this startup catalyst program. So if you want to read more, you can just go to startup program and you can visit our stall, our booth to learn more. So thank you so much, everyone.
Good afternoon. My name is Janet Daly. I am the head of partnerships, ecosystems, and strategic alliances at Diamond Trust Bank. First of all, I was pretty worried whether I will, be visible from here, because, well, about the thing and whether I'll reach the mic. But thank goodness for the thoughtfulness. So anyway, I wanted to quickly. I've been given 3 minutes to give you a very fast overview of what DTB is and what we do. So DTB is a bank that has been here for 75 years, maybe known to some of you. Over the time, there's been need for the bank to actually start looking at how it is that it can actually have the most impact in the market. And that drove the bank to do digital transformation and embark on that journey. And the good thing about that is that you are the beneficiaries of the digital transformation journey of DTB. So one of the things that DTB felt it was important to do was to actually look at what are those things that they can do in the market to create impact, and hence came the digital partnerships and collaborations. And what we do there, first is we sit to understand your business. And we have, and I'm actually very proud to see that quite a good chunk of the people in the audience are actually partners at DTB. And we had to take some time off most of last year to sit down and understand your businesses in the different spaces that you're working in. We were looking at health techs, edutechs, fintechs, different kind of tech-enabled businesses. And we wanted to understand how is it that the bank can come in and facilitate your business through collaboration. And one of the things that we noticed was that fintechs and tech-enabled businesses, as a whole, one of the issues that they have around the market is just traversing the regulatory framework. Is also understanding how it is that you can look at the scope of your business with finance as one whole subject as opposed to different subjects, because you have different players pulling at different strategies. So one thing we needed to do was ensure that whatever it is that we are doing doesn't compete with your strategies. Our strategy is basically to enhance and facilitate the growth of the partners that we currently are working with. And to enable us to do that, we had to quickly look at different aspects and different approaches. And one of the biggest approaches that we have put in place is banking as a service. And one of the lessons learned from you guys is not the traditional bank way of doing things, where we perfect something before we take it to market, is to actually work with our partners and our customers to actually see what it is that is a best fit for them for now, and see how it is that we can help them to get to where it is that they want to go. So the biggest challenge that we had with the fintechs coming to talk to us, and I'm not just saying the fintechs, but because this is actually specific to them, was that they have a brilliant idea, right? And they have ways to make the idea come to life. However, they have no way of validating that without going to a market that has the kind of controls that we currently have, which these controls, actually, once we sit down with the fintechs, they get to understand that the controls are actually for the betterment of their business. And so for us to be able to solve for those fintechs and the other fintechs in the room that we are yet to talk to, we had to get ourselves out of the banking mindset. We had to forget what banking is. Banking has been there for millions of years. Okay, fine, maybe not. But you understand what I'm saying. Banking has been there for a long time, but the consumer has been evolving. The consumer no longer consumes of financial solutions at the bank. They consume of financial solutions at the point of their need. So it is moot for the bank to expect to create every single solution for the consumer. So what do? We sit down with you. We understand what is your plan, what it is that you want to do, how it is that you want to go there, what are the challenges you're facing, and what is the role we can play. We do what we do best, which is financial solutions. We look at solutioning, we look at what we can plug in, and most often than not, we talk to partners who have brilliant ideas, but they have already seen what they're solving for the next 2 years. They haven't seen how to move to the next 5 years, right? And we sit down with them and say, okay, fine. Well, this customer, remember you're renting the customer's attention. There's no one here who can own a customer full, right? Each one of us is working with financial services at different points. Some of you will use M-Pesa, some of you will use Tala. At the different point of your need is when you're calling on your financial service. It's no longer the pillar of what it is that you're living for every day. So the banks, as a bank, we decided to come to the back and decide and look at what it is that people are building, how it is that we can factor our knowledge and expertise. A bank that has been running for 75 years has some knowledge and expertise that you can leverage on, contrary to common belief. And a company that is coming out in the last 3 years has some agility and understanding of the customer that the bank can actually benefit from. We don't compete. We are not here to compete with fintechs. A fintech that holds 5,000 customers and is supporting them, and all they need is a payment rails, is a stores of value, is a fintech that is of more value to me than if I was to build the same solution and take it to market. Don't you all agree? So we are not here to compete with fintechs, and that's why when the opportunity to partner with the county and the 27 other ecosystem players to make this a reality and to see what it is the bank can actually come in to serve, because we are coming here on purpose of servitude, it was a brilliant opportunity for us because it was giving us an opportunity to not only understand our challenges and to not only understand our ways of working, but to also understand the customer's way of working through the solution that they are willing to work with. We don't want to change the customer's behavior. We don't want to tell the customer, no, don't take a loan from Tala, please come to the bank. We want to tell the customer, if Tala is serving you, we are happy to support Tala to serve you better. So, my dears, because Mercy is looking at me like I've taken 2 years here, I am going to, I still have time. Oh, good stuff. Guys, looks like I'm a favorite to Mercy. So, what was I saying? Okay, anyway. What I was saying is that at DTB, actually, when we opened this, when Victor and the governor and the team were opening this session, the thing that Governor Sakaja said that I thought I needed to actually take note of and refer to it here was that innovation has to be intentional. The bank running in the way that it was running was perfect, but the bank is taking an intentional strategy to serve you. And we are serving you through giving you the tools that you need. We work with you through the regulatory frameworks. We work with you to make you understand some of the corporate governance things that, you know, when I'm building a system, I'll be busy building the system, not wondering really what are the corporate things I need to look at. We work with you to actually start looking at them. And the other thing that makes me very happy every day when I get to work is the fact that we create ecosystems. If I'm working with company A and they're offering service Y, it only makes sense for me to connect them to company C that is giving service X. And that way, it makes it easy for them to quickly scale their businesses. We are present in 4 countries, and one of the promises we give our partners is that whatever it is that you plan to do in Kenya and you want to scale it to Uganda, Tanzania, and possibly Burundi, we are going to be the power behind your wings. We want to be the people that actually sit down with you to understand, because we already do, what it is that is in Uganda that perhaps would be a challenge for you, and how do you actually navigate that? Because again, guys, doesn't matter how you look at it, your growth fuels my growth. It's not the other way around. I just build what needs to be built for you to consume of and grow. I just understand the policies better. I would understand our regulator better. So when you come to me and you ask me, why can't I use just someone's name and ID to open an account, I'll explain exactly what kind of trouble you'll get into if you can't be able to identify and know your customer at the point of them using your platform, and what kind of challenge it is that you're likely to be facing, and how do we work together to make that easy for your customer. We work to ensure that you work. Ladies and gentlemen, I do have a video that I want to show you. I'm not sure. Good
In
stuff.
today's rapidly evolving world, access to digital financial services at the grassroots level is critical to achieving the Sustainable Development Goals and Vision 2030. It's not easy for banks or even one organization to get to that level everywhere and solve everything. Introducing Astra, a program that allows the bank to partner with different entities offering different products at different levels. We do what we do best, which is to offer financial services, and they do what they do best, which is software technology and creating suitable products that are fit for the market. Astra offers more than just financial services. The bank also provides advisory guidance, support in the regulatory landscape, and organizational guidance on governance. We're creating products with you, for you, which means that you can also serve your customers just like the bank or any other financial institution. The bank will extend all its financial services such as store of value, cards, payment rails, lending services, investment services, insurance services, and other curated solutions. All you have to do is understand your product and the impact that you want to make in the country and regionally. DTBX is here with Astra. We'll provide you with the technology and platform you need, and we'll work with you on regulatory approval and cybersecurity. Once you're live and ready in the market, will work with you through business reviews to offer guidance, support, and walk the journey with you. With Astra, we're committed to supporting fintechs and tech-enabled entities to permeate digital financial services at the grassroots level and every level. Astra to the stars.
Thank you. So I know the question is, what does DTB have to do with Astra? As I said, intention. The bank decided, if we're going to be intentional about it, let's create DTBX. DTBX is actually the department, if you so wish, that basically takes care of you. The people who you walk to talk to understand your language. They'll not be telling you, please open an account, here's a form. We'll first understand what is your problem and solve it for you. And then we have Astra, which is the program specifically for tech-enabled business. Ladies and gentlemen, please welcome to our stand outside there, but you can always reach us and the team. Thank you very much.
Thank you so much. The only reason why I allowed her a few extra seconds is because I understand that banks are needed. How many of us have a bank account? All of us do, right? And so if our banks are not adjusting or adapting to our needs, then we have a problem. But really, thank you so much for sharing about what DTB is doing, and really 75 years heading to a century. And the fact that you're actually willing to still evolve and adapt to the evolving customer needs is really commendable. And there are a lot of things that I've also picked out from the different speakers, you know, how Nairobi County is actually creating systems to solve local county problems and challenges that really are serving a larger population. If you look at Nairobi, we're really a regional hub for East Africa and even the Southern Africa. So having those solutions right in this county that can serve the larger region, looking at what the work the association is doing in terms of policy and research to enable a more conducive environment, not only for the fintechs, but even for the customers that are also using these different technologies. Then looking at Paystack, how you are able to tap into business coaching and mentorship that really helped you to build a company of value that even saw you being bought out by Stripe. And I think that's really commendable. And it's one thing that also we're trying to challenge Kenyan startups and SMEs to actually be bought out by a larger player. That, in a way, is also a big win. And then also looking at AutoCheck, how to deliver customer satisfaction through purchasing motor vehicles with ease and convenience. And I can do this while just having a cup of coffee. So thank you so much for that, my panelists. So I'd like to ask the photographer to come and take a photo as we wind up this first session. Yes, you can stand and take a group photo. So a round of applause as they head to their seats. Thank you so much. You took a lot of time and effort in developing the videos and the presentations and speeches and feedback, so thank you so much for that. Oh yes, sorry, there's someone in my panel. So if you know you're in my panel, kindly remain behind. So I'd like to invite our second panelists. And this one will only take 20 minutes, given we have stretched a bit on time. So I'd like to welcome back Mr. Wilson on the panel. And then also we have Mumbi, who's the director of Tala. So you can welcome her with a clap. Then followed closely by Ken Lucidza, who's the vice president of product at Cellulant. Those are great people. Then I'd like to welcome back on stage Mr. Henry Mbogwa from AutoCheck. And then, oh yes, you can give him a clap also, yes. And also Ishad Mutur, who's the CEO of Aspira. Wonderful. I think we need to give them a round of applause, people. Let me tell you why. Public speaking looks very simple, but you and I know it's not easy, right? They have spent many hours in front of the camera or in front of the mirror just trying to practice. So we really do appreciate you taking your time just to be here and to actually have this discussion. So a bit of a ground up as we begin the discussion. It's one of the key focus areas of Nairobi County under the Innovate Nairobi Tech Week that is really trying to bring a spotlight on the 500 plus innovation stakeholders in the county and also in the country who are doing a remarkable job. If you look at the fintech sector, it's one of the sectors that is actually putting Kenya on the global map. Some of the wins that we've seen in the sector, we've had in 2022, the fintech investment in Kenya actually reached an annual record of $124 million, and that was 5 times fold from 2021. We have a couple of other fintech examples in Kenya that have been able to also fundraise, that have contributed to the bucket of fundraising. One of them is M-Kopa, that is an asset financing platform, but initially started out as a solar company, and that closed the largest deal, raising a notable amount of $75 million in the latest venture round that has been led by the Generation Investment Management. The second one is also looking at Pesesha, where we actually saw a pre-Series A round of $11 million that actually was closed recently. And in total, looking at the number of exits in the finance sector, we have over $287 billion that was collectively raised when all these fintechs were actually bought out. So there's big business in the fintech sector, and that is why even at the Innovate Nairobi, we are having this discussion to really give its importance and see how we can actually strengthen this fintech sector to have a bigger and much more inclusive impact. So I'd like for my panelists who are not in the initial session before to have a chance to introduce themselves and also to mention why this topic is important for them. I'll start with Ken.
Can you hear me? Good. I'm Ken Lisuza, Vice President of Products at Cellulant. I promise I am not Rigiji. I just build solutions using technology to solve our problems in Africa. At Cellulant, we run a payments platform called Ting that enables businesses, both large and small, to accept payments through multiple payment methods and also make payouts, whether you're paying salaries, you're paying your bills, and such like things. And for us, our presence in 35 markets in Africa and physical presence in about 18, we really remove the hassle for you to do those things, make payments and make payouts. And we allow you to just focus on what you do best. If you're a furniture selling business, just sell furniture. We remove the hassle of collecting payments and doing reconciliation and such like things. It's a privilege to be here. Happy that Nairobi County is hosting this forum because it allows us to also showcase what we do and also connect with the different players who are doing impressive things in the space. And I believe in the power of collaboration. Partnerships will also improve the services and offerings we do, and it's better for the target audience, SMEs, and then inherently to the end consumer. So thank you.
Great. Hello, everyone. I hope everyone is doing well this afternoon. My name is Mumbi, Anstella Mumbi. I'm the General Manager of Tala in Kenya. So just by a show of hands, how many guys know Tala? How many people are Tala customers? I laugh because, one of the things that really was a big influence for Tala being founded in Kenya was just a question of how do you democratize access to credit. So if you look back at 2014, the only way you could access credit is by actually going to a bank and having a bank account. The thesis of companies such as Tala and digital credit as a whole is how do you look at an individual Kenyan who is transacting through M-Pesa and having alternative sources of data and use that to actually advance credit to them. So that becomes the big innovation, and I know we'll talk about that a bit more. And the other half of it becomes how do we also reduce the stigma as a country around credit. That's why the number of hands reduced tremendously when we talk about have you been a customer of Tala. So there's also a discussion that we'll have there as well. That said, just thank you to Victor and team for putting this together. I remember meeting Victor a couple of months back and him sharing the vision of this event, and it's great to see how the ecosystem has come together, as well as having an opportunity for government, customers, and ecosystem players to discuss pertinent issues. So looking forward to the discussion.
Thank you, Anstella. Good afternoon, everyone. I'm Irshad Mutur from Aspira, Kenya. And what is Aspira, Kenya is, I met some people who told me about the hire purchase in the good old days in Kenya, and where you want to buy something and pay in installments, and you needed to go and even get your village chief to write a letter, endorse, and things like this. So in 2018, we brought Aspira Kenya here. We partner with more than 250 merchants in Kenya across more than 500 stores. Basically, people register with Aspira, get a limit which is similar to what you have on a credit card, and can walk into any store, buy on credit, pay up to 24 months installment. So it's the modern concept of buy now, pay later, but you don't need to get any chief, you don't need to get collateral guarantees and all that. We give unsecured credit for buy now, pay later of up to 1 million shillings to individuals in Kenya. Yeah, so that was where we started in 2018. And by 2022, we figured out that our clients had other needs. And we started the Soma education loan for the school fees of our clients. Again, you have school fees to pay, or you have university fees to pay. You just register with Aspira. We pay the school fees, and you pay us back in installments. And by the end of 2022, we saw also that there was a need for SME funding, which came from our retail partners and said, look, you're financing individuals, but we have SME clients who want credit. And we started the Aspira Business Loan, which is basically up to 3 million shillings of loans to businesses, mostly SMEs, over up to 24 months at a relatively affordable rate of interest, again, without security, without collateral, and using Fintech to accelerate the process, because it's mostly focused on convenience and speed. Thank you.
Thank you so much. A round of applause for them. Yeah. So if you look at Fintech, if we're just to demystify this big word, again, also going back to the stigma about financial technology services, right? It's more about providing a platform to enable more people to access goods and services and actually be able to pay for them. So looking at how Fintech is actually an enabler for economic development for countries, how are you seeing that as a strategy for involving governments to come on board? At the same time also, are there any case studies or examples that you've seen on how Fintech has really helped to spiral or increase the growth of businesses, whether it's looking at even how governments also is integrating financial technology services? What are some of these examples that you're seeing? And I'll start with Wilson.
Good afternoon once again. I'm sure most of you at one point have been to government offices, tried to seek government services. How many of us? True. Either at the national government or at the county government, isn't it? And if you're able to reflect back, for example, at what used to happen at the Times Tower, I think most of us are familiar with Times Towers, whereby if you went to the Times Tower, you witness a long queues, isn't it? Try to get a pin itself was a nightmare. You go there, you meet a lot of brokers, and even you can spend the whole day without getting the pin. But after automation and digitalization of the processes, right now you can be able to get a pin from the comfort of your desk. You only need to apply from your computer, and then get your PIN. Look, reflecting at the county level, and 2 or 3 years down the line, for you to be able to be served at the county, there was no integration of the systems. And for example, you want to get a service at the county. The county, the way it is set up, it has various sectors, and each and every sector used to charge its own fees. So you move from one department to another department, try to seek for the services. And from there, you've been maybe given a paper, then you go to the bank. When you go to the bank, you make the payment. Once you have made the payment, you come back to the county for even a manual receipting. So from the ones you go to the cashier, it's the cashier who give the manual receipting. From there, you go to the department that area sent you, confirming that you are paid. What was the implication of this? The whole day, you spend the whole day moving from one desk, from one department to the others. Yet it's possible you not be able to get the right services. And at the same time, due to the precursor of the whole process, we end up getting the wrong hands of the brokers and the rest. With the integration of the government services, and particularly with what you're calling the Nairobi Pay system, a customer, only what he needs is to register, is to go to a cyber cafe, or you have internet at the comfort of your home, wherever you are. Register yourself. You go to there's a portal. You register yourself, become a registered taxpayer, and you apply for the service that you want. Get the invoice from where you are. Once they're invoiced, use the available platforms. If it's an M-Pesa, or you go to the bank and make the payments. From the comfort of your desk again, you get a receipt. And within few minutes, you are able to have gotten the service that you need. There is a power of automation and digitizations. It saves times. It saves a lot of valuable time moving from one point to the other. And at the same times, you cut down on the cost because you reduce the paperwork by a greater margins. I don't know how to emphasize that when you are frustrated moving from one government department to another, you're more likely to get in the wrong hands, and you end up paying something that you're not supposed to pay. You get in the wrong hands of the brokers and other agents, and you get induced to pay for the wrong things. I think that's the power of digitization, and especially with the integration of the systems, especially what you have at the Nairobi County. With the Nairobi Pay, you are assuring that you can able to get the services from the comfort of your place, and by so doing, we facilitate the business operations. Asante.
Yeah, so I think fintech is an integral part of the digital economy, and many innovations that have been made possible by fintech have enabled businesses, both big and small, to thrive, right? And take, for instance, SMEs. Passionate about them. They form about 80% of, like for instance, Kenya is 80% SMEs. And you can imagine by supporting them and making sure their operational efficiencies are not an issue, they're able to thrive. They create more jobs. You increase earning power of citizens. You grow the GDP. You have citizens who have more disposable income, and overall growth of everybody, including to the citizens. And notable innovations that you could attribute to fintechs, for instance, let's not talk about digital identity, which is a very big problem in many parts of Africa. So if you have businesses who are creating systems and platforms that I can verify who I am, and you can know for a fact I am indeed who I say I am, whether I'm a merchant, a business, or an individual, is super important. Take that to payments. For you to even start accepting or collecting payments from intended audiences or business, with the advancements in the identity, you can sign up on a platform and instantly start collecting payments and even making payments. And that leads to the next step, which is, for instance, lending. Now, as a business, I can collect through all these platforms and create a profile, which I can get lending for my operational expenses and grow my businesses, which we know for SMEs is a big problem. And it goes on and on and on. So I think fintech is key. It's a huge enabler. We need to promote fintechs to grow, working with governments and counties, working together, create policies that help both the fintechs thrive, other tech-enabled businesses thrive, serving them SMEs, and overall, as a country, will grow.
So I will tackle that query from what you're trying to do as in AutoCheck. You realize, especially in the field that you operate in, has so many brokers, so fragmented. So you'll find a broker who is seeking just to sell one vehicle, and maybe that's good for him. And investigation, you've realized that the reason as to why these guys are suffering is because on the back end, they don't have the capacity to basically be able to take on, to finance their working capital needs. So how we've come in riding on tech and fintech is we allow these particular brokers, we actually provide for them like a marketplace, whereas you could only have been able to reach one client or 10 clients. With the marketplace that we provide to you, now you have an access of 100 clients. And then we realize also on the back end that you actually need financing. So we actually come in behind you and actually able to offer that financing. So on the front end, the customer is actually seeing you, but on the back end, we actually are the ones that are basically carrying you along, which would not have been possible without fintech. At the same time, you actually don't even need to have a physical presence in terms of a branch, because we give you a system and you're actually able to ride with on our system from end to end. So basically, as you can see, technology and especially fintech is helping in terms of structuring businesses. And previously, people that more or less could not have thought of having structured business. But now with fintech and tech, it's possible actually now to have structured business and creating employment.
Yeah, just to continue the beat on credit, because as Tala can tell, I'm a big fan of the power of digital credit. Just looking at Tala specifically, to date we've served about 3.5 million Kenyans. And that's one of the things that I always found very interesting, even as I moved into the company, because it was for me a clear picture of just the value of fintech in empowering ecosystems. So I know Lisuza did talk very broadly about the different pieces of how digital payments can actually unlock power into credit. And I wanted to spend a bit more time there because, as we've said, 80% of our ecosystem and our market in Kenya is MSMEs. And one of the things that continuously surprises me is we continuously see about 70% of borrowing being by businesses, which is very interesting. So the question I always ask myself is, we do lending to individuals, so how does this work? Then one of the things you learn with MSMEs is that there's no difference between the individual and the business. It is the same person. So it continuously becomes a question of how do you then leverage all the data that is being created digitally, whether it's through the payments going into the SME, individual payments, etc., to assess for credit and actually advance credit to SMEs. And if you're actually able to do that, then that's how you truly create the value in the ecosystem and the value in the markets that we need to create. So whenever I think about how fintechs are truly empowering ecosystems, I do spend a bit of time on two things. One is payments. We just have to make sure that the flow of money is efficient and timely. Then number two becomes access to credit, because when you have access to credit, then you're able to buy inventory, you're able to stock up, you're able to grow your business. And that is exactly how entire GDPs start to go up.
Yeah.
Thank you, Ansel. I think from my side, I view it as in Kenya, we have been able to build quite successfully a proper fintech ecosystem, which, like Ken was saying, it starts even with the authentication of people, of businesses, down to the credit bureau reporting, the data. And not to forget the access to internet and M-Pesa. All of these combined have created a proper fintech ecosystem. Without all of these, we wouldn't have been able to create what we are doing today. What it has resulted is that fintechs, like Tala, what Mumbi was mentioning, like serving 3.5 million Kenyans with a lower transaction cost, with more accessible credit. So as an industry, the fintech industry of Kenya has been able to democratize access to credit, affordable credit, accessible credit. So today my customer who is maybe in Bungoma, he doesn't need someone from Aspira to go and move there and then onboard him or process him for a loan. He can buy anything from anywhere in Kenya because we can onboard him using cutting-edge tools. We can process him. He can pay. I mean, he pays by M-Pesa within less than 10 seconds. It's automatically allocated to his account. I mean, 10 years ago, we would have thought, how can all of this happen? Today, it's just the basic level in the industry. And thanks to the logistics also, which has followed the pace of development of fintech, you can be anywhere in Kenya and you order from anywhere and they deliver. So it's amazing how all of this has come together to create a different business environment. And this vibrancy of the business environment is very conducive to the growth of SMEs. Thank you.
Yeah, thank you so much for sharing that. And I think it's also good news for Wilson to see that all these things actually contributing to an enabling environment. And so just picking a few things what you're saying. One is, of course, on the convenience, right, of access to services through a seamless platform to access credit, but also to provide purchasing power, even for the customers who want to buy the goods and services. And one thing I know, even looking at the work that we do at ASEC, so because we are a network of different coaches and mentors across the country that are supporting entrepreneurs in different categories and also in different sectors. But one thing we've seen is that fintech actually cuts across all sectors, right? From manufacturing, you have agriculture, you even have the green and waste businesses, you have those who are doing pure ICT, like building websites or offering payment solutions. They're all using fintech services. But we never talk about the marginalized groups or the socioeconomic challenged groups that we have within our community. That's the people with disabilities, those are the women and the youth who are living in different economic conditions. We're also talking about those who are also outside of the urban cities. How are we actually involving these different marginalized groups to ensure a clear and progressive digital inclusion of the services and the products that you're actually offering? So I want Ken to touch a bit on that one, and then also we can have Mumbi also touch, and also Ishad.
Yeah, I think one of the biggest things we're trying to do now is make sure that we go beyond what Kevin was saying, business as usual, right? We're, at first when you go, and maybe it's because of the predisposition of Africa and maybe Kenya as a country, we're still growing, we still have very many sectors and businesses in nascent and growing. You can see a lot, cash is still prevalent and everything. So the first thing you want to do is just solve the bare minimum. But now we are, and even regulators are challenging us, guys, you need to solve for the underserved populations. You need to solve for the disabled population. You need to solve for, make sure even as you creating an environment for a normal person, let me say, to start up, get into the business and landscape and do. Also, somebody who's not able to move as quick as possible can, whether it's visually impaired, whatever type of impairment. So even in our products and services, be it the channels that they interact with, there need to be capabilities that enable them to not feel that they don't matter, right? And it's such a fundamental thing that if we don't address such things, very quickly they'll become a pain. That I think, and it's good to see many companies, even banks, are becoming an advocate of such things, basically. Yeah.
Yeah, and just to continue that theme, I think, digital credit in its founding, and Chairman talked about that a bit, is actually just about reaching people who were initially left out of formal financial ecosystems. So, I was giving the example in my intro around, in 2014, if you didn't have a bank account, essentially meant you couldn't access credit. Moving forward, in a world where the first time a lot of Kenyans were accessing any type of account was through M-Pesa, then now they're actually able to also get credit access. So, that was actually the entire founding thesis of Tala, and our founder, Shivani, was actually working in the UN at the time, and she quickly realized that a lot of people who were initially left out of these formal financial ecosystems were honorable people who just didn't have a way for banks to underwrite them. So it was a question of how can we leverage tech, machine learning to actually figure out how do we offer credit and advance credit to these individuals. So fast forward, this year we did an impact survey after being in the market for almost 10 years to try and understand have we been true to that mission? And one thing that stood out for me is, if I remember the number correctly, it was about women. We were looking at impact of access to credit on women, and I think the number was about 85% reporting that they felt a lot more confidence just by virtue of having access to money. Then the other one that was more interesting is about 60% saying that now their decision-making within the household had improved. They were being taken more seriously. So for me, these levels of very simple, type of impact in market, especially for, individuals who've been left out. So think women, think young people, think MSMEs who technically end up being women and young people. It starts to show the impact of fintech. Then last thing I'll mention is when you actually open the door in terms of financial inclusion, you stand to be surprised by performance. Our best repairs are actually women, older entrepreneurs. So for us, we keep learning that when you actually believe in people and trust and enable them to accomplish what they need to accomplish, then that's actually how you derive business value.
Thanks. I'll start with an anecdote. Like last year when we launched the education loan, because it's a new product, I had to manually myself go and create the schools in the system. And I was surprised because there were schools from very remote areas for which the people were applying for school loans, and not for big sums of money, it's like modest. But two factors came in, is that there was social media. There's an almost universal access to internet in Kenya, almost universal access to social media, where people learn about what fintechs can offer. Then there was the convenience, again, due to the fintech ecosystem and all that. And I think that's the key. It's not only about Aspira, it's about so many fintech players today. We're able to reach people who are in very remote areas. They're able to reach us without even having to pay matatu fare, you see, like the data they use is cheap. So the democratization of access has played a big role. And then when I was working for our business loan, for example, and I met a farmer, and he showed me that with 30,000 shillings, like 20,000 shillings of liner and 10,000 shillings of manpower, he could dig a water collection facility, put the liners and collect 140,000 liters of water. Collect for the rainy season, and it stays like for 6 months for irrigation. So this kind of how do I say, this kind of interventions of fintechs in industry, in farming, in education, play a big role in uplifting the living standards of people, especially those who are underserved in Kenya. Yeah.
Thank you for that. And I think also you mentioned something about the training. Can you just touch on that one as well?
Yeah, so what we felt like is myself being a parent, and I'm sure like everyone who's a parent here, whenever we have to pay school fees, it's a headache. We have to scrap for money everywhere. And education, not having education is a handicap, which is as much of a handicap than having a physical one. It's like, it's a big, how do I say, it's very detrimental to the development of people. It's very detrimental to the development of a country as a whole. So education is key for everyone. And that's why we said, okay, let's give a loan facility. We call it SOMA. You can have more information at our stand over there. And empower people to pay the school fees. And then we found out that, okay, there were university students who needed some financing arrangements. Then we found out that there are some people who are working but who need to get trained and who need financing arrangements, and we partnered with a few institutions. But the way we did it is we can finance anyone from anywhere for his training. So even if we are not partnering with the educational institution or the university, we look at the customer, we look at his needs, and we provide the facility. And it's something that is picking up. Obviously, one more thing in fintech is you have to be a responsible lender. So when someone is coming to borrow, we look at his repayment capacity, and we don't just push debt to people and then they don't pay and then we go after them. I think by being members as an industry, like on this panel, we have 3 members of the DFSAC, Digital Financial Services Association of Kenya. Our chairman is here, Mr. Mutiso. And we have a very strict code of conduct that we give loans to people based on their repayment capacity, and there's no debt shaming. We have ethical practices for collections. So all of this wouldn't have been possible without the technology. And all of this brings, more than the credit, we bring dignity to people who are borrowing. So debt it's not bad to have debt, and no one needs to feel bad about taking debt. We make it something that is acceptable and a tool for empowerment.
Yeah, thank you so much for that, especially how using fintech as a way of ensuring inclusivity and restoring dignity to those who are undeserved, who are underserved in the market, to that. And just going with the theme of responsibility and ethics, knowing that you're collecting a lot of data, even going back to knowing your customer, the bio data, where they're living, how many customers have they done, what's the turnover. How are you actually managing and storing all this information and ensuring that you're actually having the right kind of data protection principles around it? Because again, in a way, you're actually serving the larger population, even if you're not actually a government actor or a subsidiary of the government. So I'd like to just hear your feedback. I can start with Mumbi, and then also we can get Henry, Ken, Ishad, and then Wilson.
Yeah, for sure. So the underlying factor here is customers have agency over their data, period. So that's how everyone should operate, where it means as a consumer, you own your data, you have the right to how that data is utilized. You need to give express consent before that data is taken. And if you want that data deleted and expunged, then that is also your right. So I do think that that's a responsibility for every fintech organization, every financial service provider, literally every other business to be true to those core principles. However, that said, just looking from a regulatory framework standpoint, I think Kenya has made great strides. I think with the establishment of the Office of the Data Commissioner, now there's very clear principles where you need to be registered either as a data processor and so forth and so on and so forth. So I think there's a responsibility for especially players within the fintech sector to ensure that they actually have the requisite licenses, because for you to be able to get those licenses, then there's a code of conduct, and there's a lot that you need to prove to the ODPC office in terms of your operating principles. But that said, just to plus one what Chairman said and also what Ishad has mentioned, I think for any customer listening, just always remember that you are actually in the driver's seat, you're in a position of power. Therefore, if you're experiencing any misuse of your data, then there are actually avenues for you to be able to report that now. And secondly, if you contact any business, they are actually mandated to honor your request. So I think for us, it just becomes a question of, are consumers very well educated and informed on what data is needed from them, what that data is actually being used for? And I'll just give an example. If you download the Tala app today, before any data is consumed, we actually have a whole page telling you this is the data we need and why, because it's not a matter of hiding it under TNCs that no one ever reads, but actually, putting it out on a single page and making it very simple, even if that introduces friction in your flow. Because then you're actually being truthful to the customer and explaining what that data needed is, and especially now that we're in a digital world. Last example I'll give around data, and whenever you're accessing financial services becomes, if you're going to a bank 10 years ago, you would carry a bunch of documents in a folder, your pay slips, your bank statements, etc., etc. So what digital credit providers do and other fintechs do is actually digitize that for you to remove the friction. So I have realized that that sense of understanding for customers is not always very clear, but at least that should give you the the mental safety of, okay, why is this information needed? However, in addition to that, by virtue of having the right licenses as a fintech, then you're storing this data and processing it in the right ways.
The issue of data is an evolving one, given the fact that currently the biggest item that most companies would monetize is basically data, right? And so it brings a loophole that people would actually want to take advantage of it so that they can be able to monetize. So the issue of disclosures, as Mobi has said, is actually very key. From the point that we are collecting that data from you, it needs to be disclosed to you that this data will actually be used for a particular a particular purpose. The disclosure also even go forward to say if you actually access a facility from us, we're actually going to hold this data maybe for a given number of years. It's also good to bring in, to make known to the client the number of partners that you're actually dealing with. So that from the word go, you actually know that your data is going to be shared with a particular number of partners. So what I find, and especially from where I'm seated, is the issue of disclosure currently is the biggest issue. But I think it's a discussion that will keep on evolving, as especially on the digital age, as we keep on digitizing, as technology keep on evolving. So I think the onus is on us, the players, actually to also keep on evolving, keep on changing. And one of the things that DFAK has actually spearheading or pushing hard is basically on that issue of data protection. Yeah.
Okay. At the heart of fintech is data, and because data today is it's money. And there is a great temptation for most of the fintechs to trade with the data. And customers are always cautious of why are you trying to, what are you to do with the data collected? And this happens both from the private and the public sectors. And I can give an example even the public sector. Remember when we started the Nairobi Pay systems, And one of the requirements was the registration. And to validate the customer details, one was required to give out the PIN number. So we've experienced a lot of resistance from the customers themselves, because they're wondering, why are you giving the PIN numbers? Is the county number, is the at the county level? To who else are you sharing these PIN numbers? Are you taking it to KRI? So that maybe somebody can get you from the other end. So I think the issue of the data and what you do with the data is very critical. And from the beginning, as one of my counterparts has said, disclosure is very key and very important. But as a government, so you're all guided by the also data protection laws that are there. And as the government, as a big brother, you always ensure that there is no exploitation of the customers when it comes to the data use and misuse. Asante.
Yeah, and Ken, actually, before you answer, I also want you to touch on the fact that you are actually operating in 35 markets. So not only are you operating in Kenya, bound by the laws here, but also how are you managing that at a Pan-African level?
Yeah, I think just several aspects I wanted to add. A lot has been said by my fellow panelists. I would like to encourage fintechs and other tech-enabled business use data to provide more value to our intended audience. We're very privileged to sit on the amount of data we sit on as businesses. So use it to give more value. There's an example I like about Alipay, WeChat. The value you get on just being on that platform is so immense, you want to be there, right? And a simple example I give is anytime I'm talking is, today if you're renting a house, you need to pay 3 months deposit. If you use data properly, and that's what they're doing in China and other parts of the world, you can profile me, you can know that I'm a good citizen, I'm a good person, and I'm trustworthy. And you just alleviate, or you remove that from the table, and I just move into a house, pay my month's rent, and continue living. And very many other value-added things you can give to both businesses and consumers. So I think it's an encouragement to all of us here. Let's use data positively to give more value, right? The second thing is, let's use, or rather, let's respect the regulation that has been set. In Kenya, we have a Data Protection Act. The consumer is at the center, is at the forefront of any data. Let them know what their rights are. Now, Kenya is one example. In all the 35 markets we operate in, there are different various levels of regulations. Some we see more advanced in other markets than where we operate. But as a business, or as a fintech, please make sure you're at the forefront of encouraging that. The last aspect I would say is, as you're building the product, and it's just a product view, make sure you're doing what is required. Protect the data when it's in flight or when it's at storage. Make sure it's the latest levels of encryptions are applied so that you don't expose consumer data, right? And when you're building the products, I know security and protection is always an interference with experience, but there are ways you can continue adding those layers of protection, but still making the user experience of your products and services easy and usable to your customers. Role-based permissions and many other things. So yeah.
No, thank you so much for that. And in closing, I just want to get your feel about 10 years from now, so 2033. How does the fintech sector look like? You know, are we seeing more collaborations and partnerships? I know DTB mentioned how now they're creating a platform for other fintechs to also work with them. So what, from your own perspective, what does 2033 look like from your end?
Yes, I think for me, 3 things. One, as Janet mentioned, banks will have to evolve. The trend we're already seeing is banks stop being the front shop, and they start to lend their services to fintechs. Because, from where fintechs sit, they have the ability to quickly evolve based on customer needs, and that's the agility that banks lack. However, banks have the infrastructure to be able to support what fintechs need to do, and this is both technical infrastructure and regulatory infrastructure. So, in summary, banks become lenders of their services. Then I think secondly for me that's always been key, and Ishad mentioned this, is credit becomes more easily accessible, channel agnostic and affordable. Right now, we've seen, credit is accessible. If you have an M-Pesa SIM card for more than 6 months, you have access to credit. So how does it move beyond that to become more, focused on what the customer actually needs, more affordable, easily accessible wherever you are? And then the last one is interoperability. Right now, Kenya is an outlier in the sense of M-Pesa being the center of everything. However, as more fintech starts to come up, then it's a question of, can I use my, the funds in the wallet, in any wallet that I have with any pay bill? So that's how it starts to look like for a consumer, and true interoperability is going to be the power within this ecosystem, where we start to dilute, monopoly of business and actually truly open up the ecosystem.
I think to just follow on what Mumbi was saying is, I used the word embedded fintech. So in the coming years, we're going to have fintech embedded into everything we do, everything we buy, everything we pay, without us needing to jump from one system to another. Like you may be anywhere, you're short of cash or something like that, or you're used to it. It's going to be hugely adapted to the lives of people. Today people are consciously going towards fintech, and it's going to be a radical shift. Just like nowadays, whenever you go to any new site, you say, use my Google credentials, and this is just the beginning. Also, I think services will be hugely customized to people's needs. Instead of, today we are very much focused on the financial part of fintech, but it's going to focus on the needs, rely less on finance, become much more predictive. Well, one of the issues like most people face if I want to go to a bank to apply for a loan, or if I'm an SME, I'm always assessed based on my past and my present, but not on the future. Which is also why fintechs have been hugely successful, because it's more adaptive. So in the near future, we'll have even more tools to predict, like what Ken was saying is this person paying 3 months of rent in advance and things like this. A lot more of behavioral indicators, much better fraud mitigation tools, and more adapted solutions.
Yeah. Just to pick up from what my colleagues have said, the fintech industry currently in the country is too fragmented. We're too many, but almost offering the same services. Just to give you an example, we are 3 credit providers here. We've met today, right? Moving forward, I think the fintech to survive and for us to be able to offer services that clients are looking for, we'll have to partner. The reason as to why we've actually made major strides currently in Kenya for the last 2 years we've operated is purely because we have used partnership. Actually, 90% of our business is driven through partnerships. And so we need to get to a level whereby we start collaborating. I talk to Mombi and say, Mombi, look, you're good at what you do. We all have data. It's the same data. You're good at what you do. Aspira is good at what you do. But can we collaborate? Can we look at this massive data that you are sitting on, and as opposed to charging a premium, given the fact that you are targeting more, can we actually be more competitive? Because as it is right now, especially from where I seated, bank seems to be the one that are taking the larger cake, purely because they're sitting on a large data, they're sitting on accessible funds. But does it have to be that way moving forward? I think those are discussions that, as in the fintech space, we need to start having. 10 years from now, how are we looking like, for example, the financial fintech bit of it looking?
So I'll echo 2 things: partnerships, and platforms. and let me elaborate. So, it might sound like utopia, but I think technology can do what politics has failed to do, to solve African-related problems. And what do I mean by this? I mean, look at Africa. We have borders. Yes, they're good. They've given us identity, but they're also one of our biggest limitations in terms of growth and scale. Look at European Union and the value and the growth they have, free trade, free movement of people, goods and services, United States of America. I mean, each state is like a country in Africa, perhaps. But in Africa, we're plagued. We're behind. And we are here talking about fintechs and how they empower and encourage businesses to grow. So we're encouraging more producers. Where are these producers going to sell this produce or whatever they're producing? Might be having some products that I'm producing here, but Uganda could be my best market. But we're not solving for that. So how could technology do that? If I look at some of the products we have as Ting, which is enabling cross-border payments, by partnering with many businesses and other fintechs, I'm in 18 markets. I have licenses to do cross-border remittances and things like that in all these markets. I can, by leveraging on that, I can allow you to pay a supplier in another African country, or even a consumer to pay you, or even me as an individual send money to my loved one who's in another country. So that's partnership. Partnership is important. There are people who already have a lot of assets and strengths. Let's leverage on that to solve such complex problems. And while we're doing that, we are safe because you're making sure you're not serving terrorists, you're not serving bad people, and I think we'll thrive. So, and as the fintechs and all these businesses are coming up, let's think platforms, because when you think platform, you won't be just solving one small thing, and then that problem of fragmentation will also be alleviated. Yeah.
Perhaps to add on that, the space, the fintech space is evolving every day, and as time goes by, there will be more evolutions in the fintech space, and as people partners, I do want to believe that there will be some other areas. Just for example, the evolution of the cryptocurrencies that today is maybe in other markets that people have get used to them, but in the Kenyan context, you feel like that people are not yet used to them. And as these fintech evolves, you also have the artificial intelligence that to other areas, these are just their norms. But within the Kenyan context, people are yet to be used to this kind of technologies. But with times, people are going to be used to them. The question is on how the government comes in to regulate the fintechs to avoid the misuse and abuse. And I believe that at one point, the government will have to strike a balance and a sensible balance so that they can support the fintech space. And at the same time, protect the consumers and the citizens. So as time goes by, I see a future and a bright future for the fintechs in terms of their evolutions, and we must be prepared and be ready to get some other surprise. Who knew that one day we'll have a Tala or somebody of that sort? Many years ago, we could not even imagine, but right now, it's a norm. What does the future hold for us? Only God knows.
Thank you so much. Powerful ending right there. I'll just speak out on three. One for sure is speaking on partnerships. You must leverage partnerships to grow. And also we have to give credit to the Digital Finance Services Association of Kenya for bringing at least even 3 of their members here. And I really have to recognize how Ken was talking to the 3 of them, So they're really trying to see how they can begin to partner even amongst each other right from here in the panel. The other thing also is looking at how innovative business models seems to be upcoming. So even for the ones in the room and the ones watching, what are some of the innovative business models you can start thinking of in the future and now start implementing today to serve a more diverse customer base? And then, of course, looking at embedded fintech, I really like that because it's cutting across all sectors, looking at also how we can use sector-agnostic channels for distribution of financial services, but then also looking at how we can use data to really build value for our customers and even perhaps even for government. all this data that private sector is collecting, how are we using that to really create more feedback and more data for the government to make the right policies and also the right regulations to support a more inclusive financial technology. So ladies and gentlemen, I want to just take 2 questions, at least a minimum. Okay, we have one here, one more. One more. Okay, so we can start with you. And the microphone.
So good afternoon. My name is Caroline Kitema. From Absa Bank. To the panelists, we hear you. I take care of growth. I take care of growth in payments. So number one is to say that this is a very critical and timely conversation that we are having. And we hope that next time we really mobilize and fill this room because this conversation needs to be had and needs to continue. So on my question, and just to mention, we already are engaging the Fintech Association of Kenya because one of the focus areas for Absa Bank now is to really focus on collaborations and strategic partnerships to bring fintechs on board. We have the financial muscle, you have the technology muscle. So what we are doing is that we are starting to very aggressively have you coming on board so that we can partner and, increase adoption and digital adoption in the digital economy. So Mr. Mutiso, Mr. Gakuya, we're going to have a word with you after this. So my question is, what do you think are the untapped areas? And as such, where do you see the opportunities going forward from where we are? And also, how has the adoption been in terms of digital economy? And what are the quick wins? What things can we do better to propel the adoption of digital uptake?
So I guess you're addressing it to everyone, right? Wonderful. Is there any other question? All right. So I think we'll tackle that one.
Okay, I'll start with the first part of the question, which was the opportunities. The biggest opportunity is, like what Ken said, is collaboration, partnership, platforms. Even like not only within the fintech sector, like Aspira, we partner with the likes of Hotpoint Financial Palace Nivers to create the BNPL ecosystem. So extending the collaborations, the platforms beyond the fintech space, and then among fintech players, there's a huge opportunity there. In terms of the other question was, what are the low-hanging fruit? What are the immediate opportunities? I think financial inclusion and areas like agriculture and education are, I think, the biggest priorities where all players could put our energies together and help people. And for example, AutoCheck, you might think, okay, what will AutoCheck do in education? But every school needs a school bus to carry the kids and things like that. So each one of us has a role to play, and if we come together, I think it's much more than the sum of the parts.
Yeah, not to repeat what everyone has mentioned, I think immediate opportunity, I see Caroline, for example, with Absa, you have very robust banking ecosystems across multiple markets on the continent. The immediate opportunity becomes, how do you just open that up for access by fintechs? And open it up in a sense where, if someone starts a company in Kenya today, if they need to expand and move to Uganda or Rwanda, they can keep leveraging Absa as regulatory partner and almost like a platform partner across the board. It's, I think that becomes like a big opportunity. And that's how banks start to truly enable fintechs. Beyond that, I think it's just a question of data, and especially in terms of unlocking access to credit and continuously unlocking additional alternative forms of data to underwrite. So, as a bank, how much information are you sitting on? What are the paths to open that data up to fintechs within reason? On the fintech's end, it becomes a question of how much data is a fintech sitting on. What would partnerships look like where we can a partner can leverage their decisioning capabilities and data capabilities, and a bank comes in with financing and we advance financing to something like MSMEs who are currently still very left out. So those are like top of mind opportunities that I see.
One of the key areas to look into, especially when you're looking at opportunity, we also need to see what is giving the decision maker sleepless nights. Like if you go to World Bank, you can actually be able to know what's a focus. And right now I think a lot of focus is on go green, right? And when you look at the solutions that are currently locally available, they are still on a very young age in terms of growth. So the opportunities, we're talking about electric cars. I know for one, Basigo, when they wanted to get their financing, they went to the banks and the banks turned them away, right? So it's interesting that some of the issues that are basically on a world level, that the issues that are being discussed, is that locally we've not really moved that path.
So I'll start by commending the banking sector, and I'll respond with the context of banks since you're from ABSA. I've been privileged to have worked with banks for the last 10 years, rolling out some of the fast mobile banking solutions. And some of the concepts we used to tell the banks, and it looked like a scene to do. Like enrolling for mobile banking, you needed to go fill in 10 forms in a branch that's 10 kilometers away. And that has changed. And more we see bankings lowering, some of the punitive processes and procedures. Granted, they've been existing for 100+ years, so you can see where they're coming from. As areas of opportunities, I think you need to continue doing that, right? If you can't do it within the normal banking context, form another team. Call it whatever you want to call it, but then shouldn't be bogged down by the traditional rules and procedures. Innovation moves very fast, and you will break many things before you get something going. But you need to break with caution, right? As opportunities, just do a scan of the fintech space in Kenya. You have fintechs in payments, fintechs in lending, fintechs in insurtech, climate tech. And one of the areas you could do is actually partner with them to advance your agenda. The customers I'm targeting, they're already your customers, you're banking them. I have a platform, for instance, let me talk about Ting, that gives you unified payment methods, single platform, single settlement. Reconciliation is not a problem. You don't have to download a file in Airtel, M-Pesa, cards, and reconcile. One platform. We could work together and extend that platform to already the customer you're banking. And this could be in retail, could be in education, could be in many other areas. Same applies to insurtech, climate tech, and all these other tech-enabled sectors. So it's a matter of, since you're already banking these guys, the only thing they look at you is a banker, so it's a custodian of money, and you lend. But if you think about it, if you don't partner in that way, they will leave you. Because the fintech now, I'll go and partner with Mumbi, Aspira, and these guys. They'll give me a loan book and give these other value adds, and then you'll be surprised where the customer's gone. So there are opportunities, and you have so much value you still add to the fintech space and other tech-enabled business to thrive for both of us.
Without repeating myself or repeating what they have said, I think the future is partnership, collaboration, and even from a banking level, as we partner with the fintechs, even at the government levels, we need people from the banking sector to partner with us. And as I mentioned in my presentation, like now we are only having two bank institutions, the cooperative and the equity. would wish to extend even innovations, but these innovation to other banks and other players within the industries, so that we can come closer and also extend the services to the citizens at their comforts. The future is changing. Later, it's not for the customer to come seeking for the services at your door, but rather it's the other way around. It's you to go to where the customer they are. So if you're able to exploit those possibilities, I think the future will be bright.
Maybe if you can just add something on that one as she's getting the microphone. We have one question. If you look at even why fintechs came to be, is because the banks became the sleeping giant. So you have, I think it was what, over 80% of the population could not access financial services. And this goes way back into the 1990s, 2000s, where even you as an entrepreneur, you could not even access that service. Even better, at least you're able to fill in the form. Getting that loan application was difficult. So when we actually had the innovation ecosystem now start taking shape in 2010, when we had our first tech and community hub called iHub in Kenya, there was now need to actually find alternative forms of financing to support these rapidly evolving startups. And SMEs were coming up with products, coming up with solutions, but they could not access credit. So what happened? The evolution of fintech began. Because now they were filling a gap within this large macro environment whereby these smaller businesses who actually needed a bit of catalytic funding to jumpstart the idea and actually go to market. So I'm really happy to see that now banks are in a way evolving and adapting to now come down to actually provide even lower forms of capital. Because again, also we also need the banks to support the work that we're doing. At ASEC, we have over 100 entrepreneur support organizations that are capacity building all these startups across from ideation right through scale up. But the one key challenge they face is always access to capital. So, and I can tell you even today, all these fintechs, whatever solution they're providing, the capital they're providing is not even enough to support businesses. The demand for capital is high. We've seen investors who are coming in to set up in Kenya and are providing this. Why can't our local banks do the same? So there's a lot of opportunity to tap into that, and we're happy to also have that discussion further on. And also remembering that even as you're giving the financing, you must partner it with capacity building. How do you support a business to access capital worth $30,000 and ensure the money goes into the right pocket? They don't go and finance. I'm sure you've also had those stories where you finance a business and they go ahead and have a wedding, others go and now buy, the latest brand of cars, and the business dies. So how then can you change that narrative into actually giving the right progressive capital to enhance business growth? And that's where banks, the fintechs really come in very strongly to now support these businesses to grow alongside providing the right capacity building support. So we have the final question and then we'll close there.
Okay, good afternoon. My question is on the unsecured loans that obviously fintechs give. How do you ensure that you minimize loss? And what's the collateral? And also, like for an example of Tala, it's a very simple process to access it. So how do you stop, what is the threshold for you to stop like excessive losses? Because someone may just provide information, then they get the loan, then they disappear, which actually happens. And my other question is, you've talked about the sleeping giant. Do you foresee a situation where fintech could overtake banks? I'll juxtapose it with the Skype Zoom thing. During COVID, Skype kind of fell off and Zoom took over, and to date, it's the more popular platform.
Yes, I'm assuming I'll have to start on this one. So first thing I'll say, and sorry I didn't get your name, Pauline, okay. So Pauline, think of it as, in terms of all different types of fintechs, digital credit providers are the only players who choose their customers. So that's always a very interesting thing to think about. So how we decide how to give credit, it's always a factor of three things. We check for fraud, we check for your ability to repay, and we check for your willingness to repay. So that is what will feed into our machine learning models to make a decision of, we'll give Pauline credit but leave out Mutiso, or not offer Mutiso credit today. So so far, think of it as the power becomes in machine learning models, and actually we have thousands of features that enable us to predict whether you will repay us or not, and whether you even have the ability to repay us or not. So that's where you see us talking a lot about data and sort of the power of data in improving our ability to continuously predict your ability and willingness to repay. Then in terms of fraud, that is usually filtered out through Know Your Customer or KYC, because when you're signing up, you'll give us your name, you'll give us your ID number, we'll do a check to make sure that you are who you say you are before we actually proceed to give you credit. And if, for any digital credit provider, and I'm sure my colleagues here will say the same, if you do that, then effectively you don't have, excessive losses, because you've essentially selected, the customers who are actually able to repay you and willing to repay you. That said, just to share some numbers, at Tala, our standing repayment rates are 95%. So Kenyans are good people. They actually do want to build a relationship with their lender, and we're turning 10 years next year. So that says a lot about the Kenyan consumer. So if you continuously offer value to your customers, then they will care enough to repay you and want to build a relationship with you. And that's what we've continuously seen in this market.
Just to pick on what Mombi was saying is, well, different fintechs have different ways of assessing people, but it's mostly leveraging technology. Like, for example, at Aspira, we ask people for 3 months of bank statements, and we ask for 12 months of M-Pesa statements to gather, because we give high limits. So we go into more due diligence on the financial standing of people. And then all of us, we have all that fraud mitigation and all this. Nonetheless, one thing which is there is that fintechs have a greater risk appetite than the traditional banking sector. Not only in Kenya, I think it's everywhere. We take more risk with our own capital, because we're not deposit-taking institutions. Probably that's also why we are able to take a little more risk. And we operate on much lower margins compared to the banks. If you look at at what rates we raise capital or we borrow money, and what rates we offer on the market, I think we're much less profit-centered and more product-centered operators. To your final question about whether fintechs will overtake banks, I think maybe Tala has overtaken a few small banks, and based on experiences in other countries, yes, some banks will always remain, like you'll have the top 5 banks who will dominate, but the fintechs will definitely overtake many of them and be among the top 10 financial players in the economy.
On the lending, they've answered everything. I think the only thing I would add is maybe lending for need. So today, a lot is more cash, which is dangerous. We are human beings. I can take the 10,000 and buy the new car, right? But can pay my KPLC bill and whatever. So I think that would help in reducing some of these things. To the second question, it's happened, but doesn't mean that as a bank you can't protect or prevent that, or your bank from going overtaken by fintechs. We have case studies in both Africa, Europe, where we have neobanks. Just started, they have no branches, nothing. It's just digital KYC, I get onboarded, I'm able to fund the account, I'm able to transact. I get so much value in terms of rewards, which I redeem for cash value. Eventually, I end up even linking my salary account or my income into this account or into this neobank. So it has happened actually. It's just that you need to, as a bank, think how you could stay ahead of the pack. And sometimes they say great artists, good artists steal and good artists copy and great artists steal. So just do that, right? And there's nothing new we are inventing. It's simply things have already been done, you just do them better. So examples could be, in Nigeria we have Wallet.ng. That's an example in Africa. It's a neobank, really growing. In Europe, Revolut, and there are many. So it's already happening, if that was the fear. I'm seeing banks in Kenya trying to get there. There are notable examples, but still have a way to catch up.
So I think I'll add for you an example. So I'll touch on the innovation side. On the banks, so if you look at Grameen Bank, how many have had the Grameen Bank? Very few. So it was actually started by Yunus, and he was actually in the country earlier this year. And how it started was the same thing. The undeserved population will not be catered by the banks. So what this actually is a social entrepreneur. What he did was create a community and mostly targeted the women within this community to actually begin contributing deposits. And slowly by slowly, as they were doing that, the women were able to withdraw the funding and do their activities or pay their bills and etc. And then slowly by slowly, they started actually building the right structures, build the institution, and eventually became a bank. And that was actually, the innovative part of it also is that the majority shareholders are actually the women who are contributing. And that in a way was a problem for that specific context. What am I trying to say? If you also look at what happened with COVID pandemic, there's a lot of things that shifted. You're talking about Zoom. Technology was the game changer. So with COVID pandemic, it leveled everyone, from the big companies right to the small ones. And all they had to do was leverage technology. And if they did it the right way, with the right mentorship and coaching and support, they were able to actually turn their business from being a micro to a super business. If you look at Zoom, the numbers before, there were less than 1,000 users. After COVID, over millions were using it. In fact, they were even overwhelmed. They were saying, kindly wait for 2 weeks before we give you a response on how to support you. So in looking at all these different scenarios, if you as an entrepreneur, and even as the bank, you can still have an innovation unit where you're actually looking at data, like what you mentioned, to begin thinking about how do I add value to different customers? How am I also using that data to help my own business leverage and grow? At the same time, embedding technology within the business to ensure you remain resilient and adaptive. Because I can guarantee you technology is here for the next, I think, minimum 50 years. So what are we going to do in that time? Right? So there's a lot of things good that can happen, but we're not saying that banks will be wiped out, no. But there's also a need for every type of organization, not only the banks. If you look at how Kodak came and went, Nokia came and went. So what are we saying? No one is safe. So you must continuously have a growth mindset in how you approach your work or building your business. If you're a student, how are you taking your courses progressively to help you build that skill? So allow me then to end the discussion here by saying a big thank you. There's a lot of insights. I've actually written like almost 3 pages of notes. But just to summarize the discussion, if you're looking at fintech, we're talking about enabling and empowering ecosystems. I love that. It's coming from one of our panelists. Fintech is enabling and empowering ecosystems. How are they doing that? One, they're delivering convenience to you as a customer. The second thing is that they're providing access to credit. For a business owner, you're getting access to cash flow to continue serving your customer. And on the other end, who's the customer, you're actually getting the purchasing power to continue building your business. The third thing is looking at providing inclusion and really serving the underserved communities. Again, using the Grameen example, that's an opportunity where businesses can start thinking innovatively to serve the underserved market, and fintech is delivering that core value proposition to them. The fourth one is looking at data. How can you use data to build more value, to innovate, to actually ensure that you're remaining resilient and adaptive in these evolving times? We've talked about climate change. Everything is going green. How are you using your businesses to actually begin adapting to that? You can only do that by capturing customer insights and capturing where the trends are by using that data. The other thing also for data, if you're an SME, kindly disclose the data and how you're going to use it as a business. And I like how Mumbi talked about having a one-pager. We need to simplify these terms and conditions. They're almost 55 pages and small font and no paragraph spacing. So how can you as a business, again, simplify the use of data within your business to also help build trust within your customer base? The other thing is also partnerships and platforms. I see this both as a pathway to scale, as a fintech business or even as a normal entrepreneur, because with partnerships you tap into existing resources that you can leverage to grow. Platforms give you the access across borders. Remember, it's digitized. So wherever you are, 24-hour economy, different locations, you can still be able to access that fintech service wherever you are. The other thing is that there's need for more public-private partnerships, and really happy to have Wilson here on the panel speaking about how he's even calling banks to come and work with him. So I really hope that we can see more public-private partnerships, not only with the corporates, but even working also with the startups and SMEs. The fintechs are doing a lot of good work. How can we bring them in to actually solve the bigger challenges within government by providing the right solution to them? And ladies and gentlemen, that's the end of our discussion. I really do appreciate you all staying here. I've seen you're all attentive. And just a big thank you to all my panelists. Like I mentioned to you, public speaking is not for the faint-hearted, but they have done it so well. And they have shared their own experiences, they've shared their learnings and lessons, and we really do appreciate each and every one of you. So I'd like us to give them a special clap. We'll do the Harambee clap. Yeah? Remember the Harambee clap? So let me ask Kevin to come and give us the Harambee clap as we close. Come. And then we can all stand. At least we also need to stretch a bit. Yeah. We can do it together. Yeah, okay. So we'll do it together, okay? So we'll do 5 claps. So moja. Kevin, can you show us the right example?
I said yes to give you support.
You're an enabler. Okay, so we do, okay, then let's do the factorial one, right? So we'll do 5, 1, 2, 3, 4, 5. I say 4, 1, 2, 3, 4, 1, 2, 3, 1, 2, 1, okay? And we have to be in sync. This is where we get to test our spirit of community, okay? So, 1, 2, 3, go. 5, 4, 3, 2, 1. No, thank you so much. You can have your seats. I think the final thing is just to take the photo from the panelists, but thank you so much, everyone, for attending the session. We have now come to the end.